assessment also of your overall spending habits. What are my spending habits like, and why am I spending? Really understanding your relationship with dollars and your relationship with money. And even think about more like, what is my emotional state when I start to spend? Is it a vice for me, or am I really spending because I need something at that particular time? So we really want to understand that. And then we also want to make sure that, if possible, that we're also living under our wealth. So, say for instance, I know a lot of companies around that January, March timeframe, a lot of people get their merit increases, and all of a sudden they have a little bit more money. So now they're spending more as well. What if we took the monies that we were getting, whether it was a bonus, whether it was a raise, and we would put that into either a savings or either into investment, and not just start spending more? That helps us when we really talk about transitioning from how we live today into a place when we're really trying to invest. Keep in mind, when we're talking about investing, it's not just investing in ourselves, but it's investing into our future, our family's future, and hopefully legacies to come. So think of that as well. We also want to avoid the credit card trap that we sometimes find ourselves in. Why are we charging? I'll talk about that a little bit more too. But think about the credit card trap, right? Before I start to ching ching and swipe that credit card, do I have the funds to pay for that? Because on the other side of that, if we don't, you're purchasing something today, you don't pay for it when the credit card comes in. We may start to pay on it 3 months from now. So what happens? That purchase that you made today, you're not paying for that 3 and 4 times over because of all that interest that we're paying because we didn't pay it off. So we want to keep those things in mind. Credit card companies love for us to do that because that's how they make money. But if we're thinking smarter in what we do with our finances, it's a great way for us to manage our money more wisely and save that money that you don't need to spend again, and you can put it into investments. So, why am I talking about this? Investments. Think about your banking account now. Think about your savings account. And I'm just going to throw out an arbitrary number. Say, for instance, you have $500 in your savings account. That $500 is sitting there for a year. How much interest are you getting off of that? Maybe 1%, 2%. I probably doubt, right? At the end of the month, you may get your notice that comes in that says you have what, 10 cents of interest occurred, right? But when you think about the stock market, especially when you're looking at investing in really great companies, there's an opportunity for you to have more of a return on your investment. So when you think about that, should I have funds in the bank? Yes, you should. We'll talk about that in a moment. But should I have everything in the bank? We may want to think about that, because if you invest in really great companies, that's more of a return that you get. So when you're sleeping at night, your money's making money for you. When you're at work doing your 9 to 5, you automatically have an increase in your pay and your salary because your money is working for you in the investment in the stock market. So think about that as well. And I'm also tired of us leaving money on the table when we don't have to. So we'll talk about that as well. Then what do we want to do? Before we even again attempt to go into the stock market, we want to really start working down our debt. What do we have now? If possible, whatever has the highest interest rate, try to eat at that first, because that's higher, that you'll be paying more because the interest rate is higher. And then once you can shave that off, then start working on those that have lower interest rates. So anytime you get paid, let's think about, do I need to go to Starbucks, or can I use that funds to pay down a bill? Do I need to buy this new dress, or can I pay that down on a bill? Do I really need to go purchase a brand new car, or maybe I can get a used car, especially if I need it, and use the balance of that funds to either pay down a debt or either to start investing. So the key is, let's think about what we do with our funds, why we're doing what we're doing with our funds. And also, Mark Monroe, I'm going to give him credit for this. He said, use and look at your funds as if your dollars are employees. So when you hire an employee, that employee should be working for you, and they should give you some sort of return on your investment. Your dollars should be working for you and should be giving us some sort of return on our investment. And if they're not, we might need to sit down and have a conversation and think about, what are we doing wrong with our funds, and how can we position them that they're growing for us.
Amen.
So, in addition to that, you also want to pay yourself first. Start on that journey when you're paying yourself first. And what do I mean by that? And I'm going to give you, well, actually, I'm going to wait to the next slide. I'm going to talk about that a little bit. But pay yourself first, um, meaning put something away for you, whether it's your 401k, whether it's emergency funds, whether it's something on the side. Pay yourself first. And we're going to dive into that right about now. So, credit, we want to talk about that too, because again, before we go into investing, we really want to look at our relationship with our finances and really understand where our finances are. Some of us, it's a hard pill to swallow. It's like, wow, I'm really in a jacked up place right now, but it's okay. It's never too late to start getting out of there. And also, these conversations, think about what we're talking about today. This is not anything that my family talked about when I grew up coming up as a kid. At our dinner table, we were not talking about this. Even hanging out with a lot of my girlfriends, we were not talking about this, right? But we did have conversations on maybe shoes or a nice pocketbook or maybe vacations, but we didn't really talk about investing and really putting funds up for the future us and for our future families as well. And I think now that we're starting to really be comfortable and really talk about this and talk about it with some knowledge, it's helping us to feel confident and courageous in these conversations. But now we can turn around and have conversations with our children, with our nieces, with our nephews, with our cousins. Hey guys, let's sit down and talk about our finances. We could talk about all this other stuff, but let's get our finances in order because it does give you peace of mind. It does allow you to relax a little bit. It reduces stress in your life. And when you reduce stress in your life, you add on years to your life as well because we're not checking out because we're so stressed out about our finances. So let's talk about that too. So, credit, understand how keeping a good credit is really good for us. It does help us in a couple of places. One is when we have bad credit, we also pay more for loans. When we have bad credit, we also pay more in interest rate. Even employers look at your credit now. And the philosophy or mentality behind it is if we have someone who doesn't, and it's a soft credit check, they typically do, but if we have someone who doesn't have a good credit score, typically that means that they don't care for or they don't manage their finances well, which means that individual may not manage my business well. So keep that in mind. This is something new that employees do. And also with insurance, when our credit is not good, we also pay for higher premiums when it comes to our insurance. So just getting our credit in order will help us in that space. So I would challenge you to say, if you are in this space where I love to credit. I love to credit. I love to charge, because a lot of people are in that space. Just think about it. When that bill comes in, if I can't pay this in full, maybe I shouldn't purchase it unless it's an emergency. And then the other piece is before you purchase it, think about why am I purchasing this item, right? Am I purchasing this because I want to look good? Real talk, right? Am I buying this pocketbook because I want to show it off in front of my girlfriends, right? Am I purchasing these wonderful nails on my hand because I want someone to look at me and say, wow, she looks really good. She looks really hot. This is real talk. And think about it. What are we doing that for? These folks aren't paying our bills. They're not paying for our kids' college tuition. They're not paying our mortgage, nor are they paying for our retirement. But we're investing so much in how we look and how we feel for other people. So, want to really change our mindset on how we're looking at finances and our funds. Forget about the Joneses. We're not trying to keep up with them anymore, but we're really trying to set ourselves up for success so that when the 80-year-old you turns back and they look at the 40, the 30-year-old you, they're going to thank you for everything that you did today to invest in your future. So another thing that you can do as well, if you haven't done so, definitely want to check your credit score, and you can do that for free. There's freecreditscore.com. There's a lot of other credit places that you can go just to know where you are, because that's going to give you a benchmark to say, this is what I need to work on. So when that credit card bill comes in, let me pay it. Here's another tip too, if you didn't know. You can, I want to say it's every 6 months, you can actually call your credit card company and ask them if they can raise your credit limit. And not that you're going to use it, but the reason why I'm saying that is because your credit is really based on the ratio between how much you have on your credit limit versus how much you've maxed out in your credit. So if you're paying down your credit card, you're working on your credit repair, and you've controlled that. You're in a good place of mind. You have disciplined that space. You can actually call them and ask them to increase it because that will also help boost your credit score. You just don't want to use it, but understand that will help you as well. So we want to make sure that we're using that wisely. Understand again your relationship between money. Before you spend, why are you spending? Am I feeling depressed? Am I feeling insecure? Am I feeling lonely? Why am I spending money? Understand that, the emotional state behind it. But then also think about, is there a better use that I can use this funds for? Right? Why am I doing this? Can I use it for something else? Do I really need that cup of Starbucks coffee? Or can I buy a purchase of a share in a company and it's going to grow for me? And then also, when we purchase things, and this is a challenge, another thing that I learned from the Come Up series is really start walking around your house. Look inside of your house. Look inside of your bedroom closet, especially we as women. Look inside our bedroom closets and ask yourself, what are these items doing for me? Have they appreciated at all? Is it helping me to grow wealth? Or is it just a lot of stuff around my house? So before again you purchase another item, real talk, being hard because it's for a reason, think about what is this doing for me and can I grow funds with this item that I'm purchasing? And I think once we get there, and it took me a minute, but when I realized it, I'm like, I don't need a new jacket or a new suit. I had an interview the other day and I'm like, I'm not going to go purchase anything new. I'm going to wear what I already have because what is it going to do for me? Right? I'm going to speak who I am. I'm going to talk about who I am. I'm going to nail the interview, but I'm not going to purchase anything for it. So let's talk a little bit more. Now that we've talked about our finances, really getting them in order, understanding our relationship with money, how do we change that and adjust that? Looking around our houses, do I need all this stuff? Or technically, can I have a yard sale? And then the money that I get on it, invest or donate, but do something with it other than letting it sit and cause you clutter. And then I'll say also, the older that we get, and we have all this stuff around us that we don't need, it also affects our mental psychic as well. So less clutter in our minds, and we can be a little bit more productive as well. So when we think about now transitioning to starting to invest, definitely if you haven't done so already, check out your company, see what they offer, especially 401ks, free money. They're going to give you some sort of match. Take the match and really invest in that. Have that match grow for you. Also, a lot of companies that are publicly on the stock market will also sometimes give you stock option plans, meaning you can purchase the stocks, but maybe at a company discount. Look at that. See if there's a way that you can do that as well. And then sometimes you can also contribute annually, usually a certain dollar amount to also the market as well. So look at those things as well. Some options and recommendations when you want to talk about starting to invest. Definitely you can open up a individual brokerage account. Fidelity, I know a lot of people use Robinhood, um, E-Trade, great places that you can go. You can also open up an IRA as well. IRAs are nice because it's after tax, right? You're putting your money in after tax so that when you take it out, you're not taxed on it other than your small short-term gain or your long-term gain. But it's not like a 401k that goes in before tax. Your IRA, which is a Roth IRA, goes in after tax. And depending on your age, if you're under 50, you can contribute at least to $6,000 a year. If you're over 50, you can contribute up to $7,000 a year. So that's another good way to start investing and where you can go. So start now to be ready when, right? So 70/30. 70/30 rule simply means I'm going to live off of 30% of the paycheck that comes in. 70% of it I want to invest. If you want to start at 50/50, you can do that, whatever works for you. But I would definitely say really sit down, whether one day, one weekend, and really go through your finances. Understand what you owe, where your debts are, where your liabilities are, where your assets are, and think about, do I really need all these funds here, or can I position them someplace else? Because I want to go back to the beginning of what I talked about. When we put funds in the savings account, nothing wrong with that because everything has a place and a reason for those places. But how much are you going to get back for that? Maybe 1, maybe 2%. But if you put your funds in the stock market into really good companies, you're talking about 30, 40, 50, 60% return over a long period of time. But it's a lot more that you would get there versus you would get just in a basic savings account. So, what are some other things we can do? Eat at home, don't go out as much, double down on what's not appreciating, right? And then no. No is a full sentence. When people tap on your shoulder, hey, can I have this? Can I borrow this? Can I get this? Unless they really need it and you have the means to do that. But my mom said this a while back. Your lack of your lack of planning does not become my sense of urgency.
Marcy told me that years ago. I'll never forget that.
Yes. And let me tell you, it's key and it really does make sense because just as much as you're investing, you're planning, you're preparing, the next person can do that as well. So life happens. People do find themselves in situations, and that's the time that you step up and you help out. But if you find yourself where we have the same strength, the same health, the same mentality, we can do the same thing, there's no reason where you can say no. And there's a phrase that you can always say as well. It is not in my budget to do because it's just not in your budget to do. And that's okay. And when you do that, it allows other people to really step up, take ownership to where they are, and really start adjusting how they spend their finances. Because you'd be surprised that people put funds where they want to, and then they look at others for where they don't want to put their funds, but yet they need it. So keep that in mind too. No
True.
is a yeah, no is a true no is a full statement. Use it when you need to, because again, you're talking about your future, your family's future, and your family, your children's future, right? So that was real talk. So the other pieces too, I talked about you want to understand where your assets are, where your liabilities are. This is just a quick view of, your personal assets. What are they? And then what are your personal liabilities? How do I reduce my liabilities and make more assets? And keep in mind, your assets minus your liabilities is actually what your net worth is as well, right? So it's just good to know what's where, what's needed to be there, what's not needed there. So now when we talk about individual stocks, we're going to transition there. But before I do that, I'm just going to pause to see if anyone had any questions just about the basic foundation. How do I get myself into a better place when it comes to just my basic savings in that part? Are we good there?
Yeah, I think so. The other speaker that we're going to have on financial health in another week is going to really go into all of that stuff that you talked about, Sid. So this is really
Awesome.
more on the investment side. So you could just
Thank you,
jump
ma'am.
right in.
So, talking about individual stocks, right? And what is an individual stock? When you think about a company and you think about a pie, so there's a company, the company is a pie, and the pie is divided into different slices. Those slices are really considered shares or stocks in the company. So, when you purchase a company, when you purchase a share or a stock, you're purchasing a part of that company. And what you want to do is purchase good companies, right? So as I learned over this last year, these are just five, not six, excuse me, not limited to, but six things that I learned in my stages. First would be know my risk tolerance. What is my tolerance of actually investing in the stock market? Just because you're investing doesn't mean that you always will have a gain. Some things could happen and you could lose. So that tolerance is if I'm going to put it in there, I could possibly lose it all. And if we don't have the tolerance to stomach to lose it all, we may not want to go in there. But when you do go in and you do have that risk tolerance, you have confidence because number one, you've done your homework on the company, you've done some research on the company, you understand that sector that you're putting your funds into, and you've done your work. So because of that, you feel confident. It's similar to, again, your dollars. Your dollars are like employees. You've done your research on that employee. You've interviewed that employee. You've had a conversation. You looked at their resume. So you feel pretty confident that this person is going to be a good employee. Now you can also look at someone else's resume and also have an interview with someone else. And you know off the bat, this person is not going to be a good employee. I will pass on them. You do the same exact thing when you're in the stock market, looking at that company. So that would be the first thing. Understand your risk tolerance. Also know what your budget is, right? So understand what your budget is, meaning that I can start off with just $50. Actually, you can start with less. But if you wanted to, I could start off with $50. And whether it's $50 every week that I put into the stock market, whether it's $50 every 2 weeks, every month, wherever you can start, you just want to start. Because thinking about this again, $50 in the bank versus $50 in the stock market, which is going to give you a better return? Most likely it's going to be the stock market. So that's the reason I'm saying get in when you can and as quickly as you can, but get in wisely. So know and understand what your budget is too. Also, I want to go back really quick, and my apologies. I was talking about emergency funds, making sure that we have emergency funds too before you go into the stock market as well, right? We talked about basic savings, understanding our relationship. If we don't need to spend, don't spend. But I do want to talk about emergency funds first before I kind of go a little bit further in here. You want to make sure that you do have emergency funds, right? Emergencies happen, whether it's your car has an issue, whether it's your home may have an issue. Hey, look at 2020. A lot of people were out of work. That could happen as well. So if you can, start building up an emergency fund first, and then you can also start paying yourself and then investing. So that emergency fund could be 3 months, it could be 6 months, it could be a full year. Whatever your lifestyle is now, try to save up on that so that you can live comfortably until you find either another job or you build back up your emergency fund because you had to depreciate or use it a little bit. I'm sorry, because you are finding yourself in an emergency situation. My apologies on that. But start doing that. And one way that I actually do that, and I just want to share this with you all. So, with my company, the company that I work for, most of us all have direct deposits. So, our funds go directly into an account, and that's where we spend our money. That's where we pay our bills. So, what I do in conjunction with that is I have one direct deposit that goes into my regular account, and then I have a second direct deposit which goes into my emergency funds. I don't see it, it just automatically goes there. And what I also made sure that I did was that I don't have that account connected to any other account, meaning I can't transfer it back and forth, not easy for me to get to. It's in a location that's not easy for me to get to. And it's just building. So every time I get paid, funds go automatically there. And that's my emergency account. So the reason why I wanted to kind of go back and bring that up, if that is something that your company offers, and you can always ask your HR person, I would definitely recommend that you do that because by the time you actually get your check, you get your check after your emergency funds have already gone into that account. So that's a great way to position yourself for success there. So the other piece I want to talk about too is understanding a business, meaning we're talking about the stock market versus a ETF. And what is an ETF? It's an exchange traded fund. So say for instance, we're talking about like Apple. So Apple would be a business. You can actually purchase stocks of Apple and now you have partial ownership in Apple because you are now a shareholder. Now, say for instance, Apple stocks were $200, and you at a place where I can't really afford to pay $200 just for one stock. You can go into something that's called an ETF, which is a lot less expensive than Apple, but it has a group of companies that's actually in that ETF. So if I didn't want to spend a whole bunch of money on Amazon, which is like $3,000 or something right now, right? Or Apple, I can find an ETF that has all of these companies or some of these companies in them, kind of like a bundle package, and I can invest there. So you have a part of these companies that's doing really, really well, yet you're not paying for the price of that individual company. So this is also part of the investing as well, just understanding the difference between a business versus an ETF. And then also the key is too, when you start to invest, understand also what's driving, what's moving the market, because it makes a difference, right? So we know what inflation is, we know what deflation is, right? We also know what wars are. We also know with blizzards or some sort of supernatural event that happens, all of that stuff actually, or even the political arena, presidents coming in and going out, all of that will actually change how the market moves because depending on how people feel about what's happening, they may invest more or they may start pulling out because they're scared. So when that happens, there is a change in the market, meaning that prices could go up, prices could go down. So, say for instance, if I have an investment, and I'll say Apple, in Apple, and say for instance, we have some sort of war that breaks out, no one's running around trying to buy cell phones at that time. So, it's a strong possibility that their prices of their stocks may go down. My investment may start going down. But eventually, when we come out of that war, people are going to go back to business as usual, and then their prices will start to come up. I mention that because when people do invest in the market, there's waves that happen. Sometimes it's up, sometimes it's down. But again, if you, long as you know that you've done your homework, you've invested in a really good company. And what do I mean by a good company? What I mean by that is that the company has great CEOs. They are very innovative. They don't have any ethical issues. They have great characters, right? Great employees, very innovative. That's a good company, good management. But then when you also look at their balance sheets, what are their assets like? What are their liabilities like? How much cash do they have on hand? Um, do they have a lot of inventory? If there's a business that have like fleets of truck and they're trying to sell them, why is there so much inventory? And they're not selling them. That might not be good. So with you understanding the balance sheet, how much this company owes, how much do they have on hand? That's also telling you whether or not this is a good company or a bad company. Does this company always file for bankruptcy? Right? You want to look at things like that. And that again gives you confidence in the companies that you purchase stocks in so that when things do happen, for instance, this situation that we're in right now, a lot of companies, and I believe it was March 15th or so, 2020, it's like we had a crash in the stock market. Things dropped by 30, 40, 50%. And I want to say even more than that. And that's because that was what moved the market at that time. So understanding that a great place to get that information would be definitely watching the news. CNBC is a great place to get that information. Bloomberg is a great place to get that information. Yahoo.com is a great place to get that information. So many places to really understand what's happening and what's moving the market. Fifth stage for me, things that I learned as well, fundamentals versus technicals, right? So, what I just talked about was fundamentals. That's just knowing the business, knowing the company, understanding their balance sheets, right? Fundamental stuff. The technical stuff would be charts. And I'm actually going to do a live demo in a moment and show you what I'm talking about. But the technical piece is actually the charts. And again, this is a high level session that we're going through. So I'm not going to go in the weeds. But what I mean by that is we all know what going up looks like, right? We also know what it looks like to go down, right? So if you have a company and you're looking at their chart, and their chart really is saying what is their trend and what is their trajectory of this company. If we see that it's going down all the time, that may not be a good company to invest in. But if we see that they're going up, that could be a very good company to invest in. But you have to couple the two, understand why it's going up or down, also with the fundamentals, right? And then the very last piece, and these are things that I've learned over the last year, would be really knowing when to buy and also when to sell. So you always want to buy low and then also sell high. And you really want to understand that. Or there could be situations where, you're investing in the company, good company, right? So you want to buy, But then you realize some scandal broke out, right? Something happened where, I'll say Boeing, for instance, multiple plane accidents. Don't want that to happen, but say for instance that does happen, it's a strong possibility that their stocks will start to go down. That may be a reason why you may want to say, I may want to come out of this and sell, right? And it even could be at a high because you don't want to lose your losses, um, but you may want to sell during those times. So kind of keep that in mind, when to buy and also when to sell. So now I'm going to just transition over and I'm just going to show you.
Cynthia, before you go, there's two questions that came up. So you
Oh,
yeah,
sure.
those real quick. The
Yep.
first question was, can you talk? Well, they said, can you talk about the benefits of a money market account? Do you know anything about that? Which is more of a savings account, from what I understand. That's not necessarily investing in. Am I wrong?
So, what I will say is, I will defer that to a professional
Hmm.
financial advisor on that.
Okay.
Good question. Yep.
And the second question was, are ETFs similar to mutual funds?
Um, they're similar too. They're very similar too. And if I can, maybe I'll show you the difference between the two.
Okay.
All right. So here, as we're in, and this is yahoo.com, and you can all bring that up or save it, bookmark it. I think this is a fabulous tool to use, free tool. I mean, you don't have to pay anything for it unless you wanted to. I also have this on my phone. You can actually download the app, and I'll get little alerts as well. So simply what this is, yahoo.com. Here, you can type in the name of any company, like say, for instance, if it's Apple, if you're looking to invest in Apple. And you can actually see what is the actual price of this actual stock. So as of right now, the market is closed. Market is open from 9 to 9:30 to 4 Eastern Standard Time. But there are people who do, trade and purchase after hours. But currently, right now, it's $121, right? That's how much this is cost. When I typically look at this, and again, I'm not a financial advisor, I'm not a professional in this space, just sharing what I know. I typically go like in a 7, which simply means I go across and then I go down. First things that I look at would be this section here. I'm looking at what is the current price, which is at 121.96. But then I'm also looking at what did this open at the last day that we traded, so which would have been Friday. So it would have opened at 120.40, right? I'm also looking at the bid. The bid is when you want to buy it, what do you purchase for? The ask is when people are trying to sell it. What are they trying to sell it for? You can also look at the range. This is just the day range. What did it open and what did it close at as well? Then you also can look at what is the 52-week range of this particular stock. So this is telling you that at the lowest 52 weeks, it was at 52, which would have been $53.15, which would have been an awesome price to pay for it. The highest that it had been, though, in a 52-week was 145. So when you look at the 121 versus the 125, you're looking at relatively about a $20 difference. So not saying it's a good or a bad price to get in, but it's not at its high, right? So I usually typically look at this information here. And then when I was talking about the technicals, talking really about the chart, right? What is this chart saying? Currently, right now, I'm looking at just one day. I can see it going up. When it goes up, that's really called a bull market, meaning that people are buying into these stocks. When it comes down, that means that people are selling. So that's a bear market, right? So when it goes up and it goes down, we're looking at that, but we also want to look at what's happening. What is the CEO maybe talking about? Are they just having their earnings report and they're talking about, what their budget was? Did they meet all of their guidelines? What is the future going to look like? And or is there something happening in the political arena that could be causing this to go up and down, right? So we want to understand what's happening in the news realm that's moving it, but also what's happening with the company that's moving it. But then also, maybe it's another company that's a competitor that's maybe announcing something great. So people are like, maybe I'll jump ship and go there. So we want to understand what's happening. So with the technical piece, I'm just looking at one day, a little bit of movement there, right? But you can look at 5 days. There's a lot going on here. This is a big, uptick in this space here. This is what this is going up. But then let's go over and look at a year. If I look at a year, this company really was down here March 2020, and that's when we really had that crash. But
Mhm.
since then, you notice that it's really climbing up. Little hiccups here and there, but it's really going up, right? But then let's look at a 5 year period. What is this telling you? This company is really traveling. It's going in the right direction. So if I do my homework, the fundamentals by looking at the books, if you want to say, and you can really go to the company's website, apple.com, type in, investment, customer investment. It gives you all this information that you can find out what's happening with this company. Now, say for instance, I put in another company like I don't know, Amazon, right? Keeping my eye on time as well. As you can see, pretty expensive, right, to get a stock in this company here. Um,
Is that the real price of it per share?
yes, ma'am.
Now you
No, it
what?
really is.
Oh my gosh. That's because y'all keep buying stuff from them.
But you can also
Consumers
see,
and you consumers.
but if you look at this company like back in 2016, right? And this is the reason why I'm saying we want to get in here now. This is always something that, people of color were just afraid of doing. Number one, we didn't have enough information about it, but we always thought this was left for other people to get invested in. But if you think about the people who invested in this back in April of 2016, right? Where my cursor is, if you look over here, see that little black box that says 722 to the right over here where it says 722?
Yeah.
Okay. Well, now it says 659.
My glasses on, maybe that's why I can't see.
That's what they would have paid for back then. So if you think about it, if this is something that we were just wise to and back then invested, that's $659 today would be 3,000.
5 years later.
Correct.
That's
So that's what, but okay, let's think about that too. Think about having now it says 722. And the reason why I'm doing this so that you guys can see what I'm talking about, what the dollar is. Do you all see that? If you can just shake your head up and down. Awesome. Okay. So if you think about that, 722, 5 years ago, if you had $722 in your bank account 5 years ago, do you think today it would be worth $3,000? That's what I'm talking about.
exactly. It's not.
That's what I'm talking about.
You're not getting
And
that. Nowhere
correct,
near. Mhm.
correct. And once we really get a handle on that and really, again, treat our money like they are employees and really think about why am I spending this? Check yourself. I have to check myself. Why am I doing this? Who am I trying to impress? Why am I purchasing these different things? And realizing that I could put my funds someplace else and it does so much good for me, I'm going to go there, right? And this is going to take us to a place where we can start living a financial free life.
Freedom.
Yeah,
Freedom.
doesn't mean like today or tomorrow we're not going to have any debt. Don't get me wrong. Or we're not still paying on maybe our rent or maybe our car insurance or whatever the case may be. But when you start seeing that your funds are going up and you start investing, I'm telling you, stress starts to leave. You sleep better at night. It's like, wow, I don't really have to worry about that. But you want to stay on track, stay on target, and continue to do that, right? And then when it comes to retirement, maybe we can retire a lot early because we put ourselves in a good position.
Absolutely.
So these are just charts, and I just kind of wanted to show you. And even look at here, Amazon wasn't doing too good, earlier years, but people invested. And even think about this too. When it started going on the uptick, it's not always too late because it still had room to grow. Now, is this guaranteed? No. Don't really know what's going to happen. But again, when we're keeping ourselves in tune to the news, reading up on these companies, understanding what's happening, being future focused, looking at innovation. And if we see this company could possibly last a good 5, 10, 15 years, that's a good place to put your funds because it's going to grow right along with that company. So think about those things too.
Cynthia, put Zoom in real quick.
Sure.
I want to see what Zoom, because a year ago, nobody was Zooming like they're Zooming now. That's what she's talking about by innovation.
Mm-hmm.
What did it come in at?
So this is just a day, and I'm looking at now, just a day chart, right? Things happen. And I will say this too, before I go too far here. I'm not a day trader. I have no desire to be a day trader. Too much stress, and I don't think I have enough knowledge to be in that space. But I'm more of a long-term trader, meaning I'm going to purchase something today. I plan to stay in it for at least 5 to 10 years, right? Long term. Now, unless something happens, there's a shift I don't expect, the company didn't expect, something happens. Yeah, I can always get out of it a lot sooner. So you want to be agile and be able to pivot, but really being in something long term is, for me anyway, is key. The other piece I want to put out there and make sure that you're aware of too, keep this number in mind, 365 plus one. On the safe side, because we sometimes have a leap year, just say 370, right? What does that simply mean? When you purchase a stock, you want to hold it, if possible, for at least 300, and I know it's 365 plus one, but for 370 days. If not, if you sell that stock, because that's all the market is, you trade, you buy, you sell, it's just trading stocks all day. But if you do sell it prior to the 365 plus one days, you pay what's called a long term, excuse me, a short-term capital gains tax on it. So it's revenue. You're gaining revenue from it. So when you do sell it before that year and a day, you pay more money. And that's usually maybe, and I'm just throwing out numbers because I don't know off the top of my head, but I do believe it's somewhere between like the 20% on your gain. So think about that. But if you do keep that, let's go back again to, I'm going to come back here, but I just want to show something really quick, Lisa. So say for instance, we go back to Amazon, right? Um, and I'm looking at this chart and I'm going to look at a year. So say for instance, I purchased, and they really didn't have, actually the year chart is not that bad, but say for instance, I purchased here at $1,800, right? A year ago. And I purchased a stock here. And say right before that year was up, the stock is now at 3,400. And I decide that I want to sell. You're going to pay at least 20, 25, depending on how much you earn, um, capital gains tax on this. That's a lot. Now, versus if I held this for what, a couple more months, and it continued to go up, or maybe it came down a little bit. Now I'm paying what's called long-term capital gain, which is a lot less. So that may be 10%, maybe 15%. So again, you want to keep your dollars. Why am I giving it to someone else if I don't need to?
Mm-hmm.
So that's the reason why they bring that up, because you do have to pay. And it depends on what state you live in too. So you can always Google it and look that up, but also check with your, if you use a tax accountant or anything like that on that. But there is a difference between short term, long term. Keep your money if you can, which is why I particularly like to invest in long term investment. So I just wanted to share that really quick.
So I wanted just to see what Zoom was a year ago versus today. Now they're a little volatile now, but what happened a year ago?
So a year ago, if I go all the way back to March, but you got to keep in mind, March is really when
Everything.
everything started. A lot of companies went down. So I'm going to go back 5 years to really tell the story a little bit more. So here, pretty much was that May, March timeframe. But if you go back here, 2019, they were at like $88 back then,
Mm-hmm.
right? They took a little bit of a dip, not much, but a little bit of dip December of 19, and then they started coming up in March
Mm-hmm.
and they started taking off,
Yeah, they took off last compared, yeah,
right?
because everybody.
Also, some other things to keep in mind too is the seasonality of companies as well, because their stocks will go up, come down depending on the seasons. So if you think about Best Buy, for instance, right? Holiday seasons, people are shopping. That means they're getting more revenue. So
Mm-hmm.
their stocks will most likely go up. But then I also want to think about home, what is that? Home Depot, those type of stores, Lowe's. Usually summertime, people are doing a lot of work on their homes, right? So usually that's when their prices will go up as well. So think about the seasonality of companies and what happens during these seasons. Even if you go down to like companies that produce salt, that make salt, right? Think about the winter months when we're having storms. A lot of salt is going out there on the roads. So you
Mhm.
just got to think about what's happening. Travel season. A lot of times during the holiday seasons when people are buying tickets and they're flying. Can't think about 2020, but normally people are flying. So usually they're doing a lot better during that time. Summer seasons, a lot of people are going away, going on holidays. So certain hotels or Disney or so you want to think about what's happening also when you invest as well. And then also if you are investing again long term, you want to, Lisa mentioned it, volatility. You want to be able to prepare for it and understand that there will be volatility. So for instance, let's take, well, we'll take holidays. A lot of people will go to, we'll take, for instance, Six Flags, or we'll take Disney. Really not Disney because that's in a heated climate. So let's just say Six Flags, right? Six, and actually, let me bring them up really quick just to show you what I'm talking about. So we'll say Six Flags. I'm going to go back maybe like 5 years. Um, Six Flags. August a little down, which I'm surprised, but March I can get it a little bit. October for sure. February makes sense, but I think we did take a little dip here though. This really isn't a great chart for what I'm trying to explain. But if you could think about a company at their peak, summertime, people are going to go out, they're going to take rides, they're going to be in an amusement park. Wintertime, you may not see that as much. So I guess that's really what I'm trying to say. So when you purchase certain stocks, understand when they can go up and go down based on their seasonality, right? So keep those things in mind too. And I will say this, I did purchase Six Flags when they were like at $15 or so. So I'm feeling good. They're at 50 now. Got a little bit of return on that. So I just wanted to share that with you as well. Just the technical piece of it. Other things that you can look at when you're at Yahoo is also like their annual reports. They have a little bit of information here, their earnings, their revenue, people do put, analysis, technical people who look at this also do put on here recommendations. Should I buy it? Should I sell it? Should I hold it? Don't mean that you have to believe all this, but it's a good gauge to kind of look at as you're doing your research. And you can also see this month over month. What are they saying in that space as well? So I just kind of wanted to share that. Also, if you wanted to look at their, should be financial somewhere up here. Oh, here it is. Bear with me just for 1 second. So I'm going to ask you guys to also either Lisa, if you want to type this in the chat, and or keep this bookmark this for future reference. BARCHART, barchart.com. This is another great stock as well when you're looking at the stock market, understanding what's moving. A lot of great articles that are in here as well on different companies that you're looking at. Because again, you don't want to go in on a wish, on a hope, on this maybe, on a gut feeling, because you can lose your money real quickly that way. But you really want to do your homework and really understand the company and what's going on with the company. So I'm going to transition super quick because I ran over time, but I want to see if I can run through these last couple of slides really quick. So when we talk, at least let me know when I need to
Yeah, we're
pause.
gonna take questions. So hold your questions because I'll have you guys ask the questions at the end. So
Okay. So when you think about the market, and I probably should have talked about this first, there's really three markets. Like, what is the market, right? We think about flea market or fruit market, but no, right? So you have your Dow, you have your Nasdaq, and you have your S&P 500. Within those markets, you have sectors, right? And there's a total of 11 sectors, and these are what the actual sectors are. So I wanted to show you that. I will say too that when you, and this is just a suggestion, recommendation, nothing that you have to do, but when you're looking at investing, it's also probably smart or wise to think about companies or sectors that you may be familiar with, right? You know a little bit more about it so that as you're doing your homework, because maybe you work in that field, you may have a little bit of leg up on what's going on. It's like, okay, I know this because I work in healthcare. So let me make sure I get into these type of healthcare, maybe companies, whether it's technology, whether it's, energy. So kind of keep that in mind as well. Again, not that you have to, because you do also want to diversify your account as well. You don't want to be so heavy in one place so that, if they do go down because it's a seasonality, you still are gaining money because you're also balancing it with another sector, right?
What's consumer discretionary? Can you give me an example of a company that falls under that?
Let's look it up. 1 second.
I hear it spoken of quite a bit, and that's the one that seems to be the lowest out of all the sectors right now that they're saying. And I don't really understand. I think that's like things that we just consumer discretion. Who would fall under that? Um,
Well, I have another great place that's going to answer your question for you. And this is called etfdb.com.
so we'll put that in
Yep, in the chat.
etfdb.com.
Yep, .com. And is it this one here? Here we go. So this here is bloomberg.com, right? And I'll share all this with Lisa, make sure that you guys get this as well. So here are all the sectors that I was just referring to, right? You can actually click on where it says consumer discretionary, and it gives you a little bit of more information, like apparel, automobile, retail. So to answer your question, Lisa.
Yeah, I thought it was.
Mm-hmm.
Things that we assumed
right.
that don't necessarily have an that we just use and we get rid of them, I think.
So you have automobiles,
Well, we need that. We
consumer services, retail, just to give you an apparel.
Yeah.
Right. So when we talk about energy, materials, this gives you a little bit more. Well, no, this is actually giving it back again. But your materials and energies, I think, kind of self-explanatory there.
Yeah, I like that sector performance because it shows how each sector is doing.
Mm-hmm.
Overall.
Which is here.
Yeah, so it gives you an overall. Yeah, I like that.
So that's a great place to go for that information as well.
Okay.
Right. So when you have your sectors, in your sectors you have different industries, and in your industries you have your different individual companies.
Okay. So there's sectors and then there's industries within the sectors.
Correct. And then your companies.
Okay.
That right. Helps. So then I'm going to quickly go over this. I'm not going to dive too much because this is like a step above just regular investing. But when you invest in individual stocks, you can also go as far as investing in what's called options, right? So say, for instance, a option would be, one option would equal 100 stocks, right? Versus one stock equaling one stock, right? So what do I mean by that? So down here is what's considered like an option chain, right? And if you ever decide that you want to get involved in options, number one, do your research, understand what they are. Definitely tap the shoulder of someone who maybe has great experience in here or a financial advisor. This segment here would not do this justice, so that's why I'm going to go over it really, really quickly. But if you did decide that you ever want to get involved in the option, a couple things you want to know first is how much is the option, right? What is the strike price? Because you always have to have a strike price. And that simply means I'm thinking that this option or this stock is going to hit this certain price. in this certain time period. So that's what I'm going to go for. And I'm saying I'm thinking, but that really means I've done my homework, I've done my research, and I believe that this stock that's maybe 100 today, maybe 2 years from now, is going to be at 150. And that 150 would be the strike price, right? You always want to know that. You also have your ask and also your bid, right? Your ask and your bid here. This also tells you what was the last price that this actual option, was purchased for. And then this just talks about the volatility, also the volume, open interest as well. And what do I mean by that? You want to know, are there people interested in this particular option? What's the volume of this option being traded today? If the numbers are really low, you don't want to be involved. If the numbers are really high, you do. And why do I say that? Because um, if there's nobody there who's buying and selling, you don't want to buy, because then who are you going to sell it to? If there's a lot of people who have open interest in it, then if you did buy it, there's a lot of people who have interest and you can easily sell it, if that makes sense. But this is deep. I'm not going to go too far in this, but I did want to tell you this is also a part of investing as well. So every option that you would purchase, or every option, holds 100 stocks. The other piece I want you to keep in mind too is the pricing on options. So it may say 2.50, like for instance, this one says 6.30. Doesn't mean that this is $6.30. It actually would be 630 cents, or $30, excuse me. Same thing as the 2.50 is really $250, because you really would take the 250 times 100, which would give you this 250. So whenever you're looking at, and the reason why I mention is, if you're ever looking at an option chain and you see these numbers, just either move the decimal point over twice or either times it times 100, because you don't want to go in there and put in the wrong dollar amount when you're trying to purchase this. So options are also another great way to also invest in your money, but you really want to understand why. There's so many pieces to it. Understanding what your strike price is, knowing that it's a contract, you have the option to actually buy it, or you can actually sell it. Excuse me, sell it. You also want to know, when do I need to get out of it, right? How long should I hold it? So much more information, but I just wanted to give you just a little bit of a taste on what that is. So I do want to show you um, just a little bit. And if I'm, Lisa, if we got to go, that's fine.
Yeah, we're
If
gonna.
you guys want to hang out, we can. If we got to shut it down, we can do that too.
Yeah, what we're gonna do is just show this last one, and I just want to leave it open then for questions and answers, just to kind of get an idea, and I'll kind of wrap that up. Yeah.
All right. So if I go, and I'm at barchart.com right now. So if I go onto Apple, again, this is giving me those beautiful charts that we were looking at. This is just a different view of that. Again, what did it previously close at? What was the volume? In here, what was the 5-day change? They did go down. And also, what was the 52-week range? I can see the lows and I can also see the highs. But if I wanted to look at options, what I was just talking about, I can click on here where it says option prices. And this is giving me that same thing. This is called an option chain. And I can see what the chain is, what's happening, what are the strike prices, what do people think this is actually the stock is going to get to. Or where it's that darker green, that means it's in the money, meaning it's already hit this dollar amount. What's next to it would be called near the money. And then this is outside of the money. Um, these are the different contracts that this actual option have, and these are the different contracts. I typically go out as far as I can, because the longer you go out, the longer you have to deal with all that volatility going up and down. And I don't have to worry about it too much. I don't have to stress out at night thinking like, oh my God, am I going to hit that strike price? So, well, I have to 2023. I don't really have much to wait. And then I also have that beyond that 365 days, so I don't have to worry about paying that short-term gain either, right? So if I push that all the way out, this is just giving me more information as far as these different options. and what the chains are. And I don't want to go too far because
I think that's a little bit over.
it's a lot.
There's
It's a
a lot.
lot of
So I
information.
keep it basic.
Yeah. So with that, I'm going to pass through that a little bit too much, but I do want to show you this because transparency is key. And also, I want to let you guys know this really does work, right? So this is me back in October of last year. And if you think about it, that's not that many months, right? So from that time frame, um, this here would be my overall gains
From October
from
2020.
October 2020. And this is with me really not having a whole lot of experience. You're talking about 1 year, far from being a pro. But this is something, and I'm super proud of it and super happy of it
Me
about
too. You
it.
can take me out to lunch now.
And also, remember I talked about that 1%, that 2%, just in the basic bank account,
Yep.
right? This is what I gained here, 8.26%,
Mm-hmm.
116. These are gains. I did lose a little bit on this. And to be honest with you, I didn't do my research. I guessed, and I got what I guessed at. Nothing,
Mm-hmm.
right? This one was 288%, 101, 63%. This is so much better. Overall, if you combine them all, it's 104% is what the gain was. And that's because of the losses
And
there
that's
too.
just in a matter of months
And
versus
that's just in a matter of months.
you have a 6-month CD or a money market account that's not making any money at all.
Right, right. So that's, and this is just my one account.
That's is that that's options? And
This is
not
right.
just strictly options.
Well, the one that has the bell is not, and this one here is not.
Okay, so it's a mixture of both your regular
Right, which I
options.
typically would not do, but I was just playing around with
So
these
you want
two.
to, okay.
Yeah. But
Well,
yeah, these are, and then you can tell here too, 2.00 was really 200, right?
oh, that's the options. Oh, okay, so I can see
Right. You
that's the
could tell too also by the dollar amounts that these were
okay. It's the
options.
options. Okay. So
Yeah.
you mix it all together. So you do both stock and you do options trading. You do both.
So I have a Fidelity account, which is where I have like my 401k. And then I also have a couple of individual brokerage accounts. And in there is where I do basically shares. So I just do regular stocks,
Okay.
whether it's Apple, whoever those companies are. And you talk about family too, right? I also have one open up for my grandson, and I also have for my goddaughter. So you can do that. You can also open up what's called custodial accounts too. So if
Yes.
you have kids that are underage, you can open up a brokerage account, and you could put them on as you're the custodial for them. And then when they become of age, you can hand it over to them. That's another way to
Tax
help them build
benefit.
wealth.
And there's tax benefits to that as well, is it not? I believe.
Well, yeah, it is, but I
There it
think
is.
for the
I got it.
most part, it's really the investment. You're starting to help set them up for
Yeah.
success.
Yeah. Absolutely.
Or you can do a joint account. You can have you and also one of your kids in there too. And that simply means that you're still in there because if you do the custodial, technically when they become adults, you have to really give it over to them. But
Hmm.
if you do the joint, you can have that forever.
I like that idea. I think
So
yeah.
I just wanted to show you proof that it does work. And
Yeah.
I'm not just talking to be talking.
My birthday was Monday. Thank you very much. Looking for a gift.
So last thing is know your risks, understand what's moving the market, including the business, have a plan before you invest, buy low, sell high, and really stick to your plan. You've done your homework, you've done your research. And the last piece, Lisa, before I go is know what's called a broken stock versus a broken company too before you invest. So what do I mean by that? A broken stock could be, back in March 2020, everything pretty much crashed. And that's because a virus happened, right? That's just called a broken stock. It recovers after that. But when you talk about a broken company, that would be a company like uh, what was a rental company that went out of business?
Oh, yeah. Who
That
was
would be like Hertz.
Hertz?
That's a broken company. People were still buying stocks, and the company was going out of business. So
Oh,
know the
Coco
diff.
J.
Right. Know the difference between the two before you purchase two. Because if it is a, say, a broken stock because things are happening and the price is going down, you know this company is going to rebound.
Yeah,
That's a great time to get in and buy.
yeah.
So you want to kind of know that too. So with that being said, I do thank you so much. Trust me when I say there is like weeks and weeks and weeks of training that can go into this, and there's really so much more that I can share. But in an hour and 15 minutes, you really can't teach someone how to invest, but you can give an overview. You can drop a seed for sure. I encourage you all, please go out and look at some YouTube videos. The Come Up series is great. Trust me when I say that. They give you such great information. Pretty much everything that I'm talking to you about, I've learned from them versus a couple of things that I've learned on my own. But mostly is what they shared has given me the gain that I have. And that's just this account, which I was comfortable in sharing. But I do also have other accounts as well. So Lisa, I'll give it back to you.
Wow, thank you, Cynthia. I look, let's give it up for Cynthia. I think this was a lot of information, and I'm so excited that she was able to share with us. You know, a lot of people just she gave a lot. So it really is about research. And so for your comfort level, for those who put 1, 2, and 3 on your comfort level, I definitely say start off small and just do research first. I would say don't touch options first until you learn stock trading before you do. And a lot of people jump in this ahead of their time. But I think the most important thing is I wanted us as women to be comfortable with areas that we probably didn't go in, especially some of us who are of a certain age who feel that it's too late, especially when we're getting close to retirement too. I think we get concerned about that kind of a thing. But as Cynthia showed you, you're leaving so much money in these CDs, these money market accounts. There's no money in that at all. You have a 6-month yearly, there's no money in it. It's nothing. You're not making anything off of it. So if you can take a little bit of money and you do your research and invest, so much more of a return of investment you can get. And I think it's more about empowering yourself. I like you use the word freedom to not have to worry about, when am I going to retire? Or, all these millennials are all under the age of 25, 30 years old, and they're already billionaires because they started early. And
Yep.
so if you're not comfortable talking about money, our next speaker is going to get into the whole emotional piece about that. I definitely encourage you to do that. But you touched on it, legacy. It's important for us to get in the habit of having conversations to our children, to our friends, to our partners about money and how we could use it. Abundance is here, and use it for whatever the things that you think you need to use it for. So I'm going to open it up for questions. I mean, I really like this whole how you broke it all down. It definitely, there's options too. There's investment clubs that you can join to learn as
Mm-hmm.
well. Warren Buffett, that's how he started with all his Berkshires. It's all about investment clubs. So if you're not comfortable doing it on your own, I encourage you to join an investment club. That's a great thing. You have book clubs, sitting there read about investment. Hello, I mean, you can do that. So any questions specifically you guys have? I'm looking in the chat box. Anything that you guys want to know about where to begin, what to do? She's got a lot of resources. So go ahead, Rosa, you had a question? You unmute yourself on the, oh, there you go.
Yes. I wanted to know when you're buying shares, is there a minimum of shares that you are required to purchase?
Great question. And no, you can buy one if you want to buy one. And there are some brokerage accounts that allow you to buy what's called fractional shares. So, say for instance, we saw Amazon, right? 3,000 and something dollars. Certain brokerage accounts will let you buy fractional. So, you don't even have to buy the whole share. You can just purchase whatever dollar amount that you have of that share. So, I believe Fidelity does that. Um, I think Robinhood does, I'm not sure, but there are certain
Yes.
brokerage accounts that will allow you to purchase fractional shares.
Mhm.
So if you just want a piece of it but can't get it all, as Jolene GC would say, get in where you can fit in.
Yes, that's right.
Yeah,
Mhm.
she does say that.
Yeah,
Um,
yeah.
you also, Rosa, had a question about ETFs. Were they similar to mutual funds?
Yeah.
ETF.
I'd have to do a little bit of research, but I believe ETFs, they are similar because it is like a bundle of things that you have in there. I just need to look a little bit more deep into that, so I don't want to give you the wrong answer on
And
that.
what are, I thought ETFs was just the way you transfer the money. Is it
Mm-mm. It's
what?
exchange funds. So it's like a it's like a bundle. If you go under the ETF db.com I showed you,
Huh?
it'll give you a list. And say, for instance, if you put in ARKK, for instance, that will give you a list of all the companies that's actually in that ETF.
And so, okay, all right. So you can actually purchase through the ETF.
Pieces of different companies through an ETF. You can do that.
Okay, all right.
Mm-hmm.
So that's an option as well.
Mhm.
So in
Yep,
addition
yep,
to straight up stocks, shares of stocks, you can buy ETFs,
yep.
and also options. There's another way of entering. Okay.
Correct. But I definitely would not dive into options until
Yeah,
you
yeah,
understand just
yeah.
basic stocks.
Stocks. Yeah, that's definitely not something I would recommend for anybody. That's
Nope.
why
So
when you did this the
options is
first,
what we grow into.
That's what you
yes,
grow into. Absolutely.
after you learn the basics,
Correct.
you have to know the basics first.
Yep, yep.
Mm-hmm.
Any questions, you guys, on Facebook? I just see everybody's watching, but nobody has a question. I think so let me just ask. Oh, that's what I was thinking of. Electronic fund transfer, EFT. I thought that.
Correct.
Thank you for
No,
reminding me. Electronic fund transfer. Thank you, Marcy. I guess my question is why, stops you from doing this right now? My question would be to you guys on Facebook and anybody in here. Oh, Karen has a question. Have you had any experience with penny stocks?
no, I don't mess with penny stocks.
Why?
I just don't. I I have no interest in them,
Okay.
and I just don't.
Okay. All right.
Yeah.
I guess my question is to everybody: what prohibits you from purchasing a stock, one stock, or anything else on your own? What is the barrier for you?
Me,
You? What do you mean?
my preconceived notions that I can't do
Okay.
it.
Yep. All right. That's
Yeah,
But
good.
the
now you
only
know you
thing,
can.
absolutely.
Yeah.
Yep. Now you know you can. And
Yes.
I purposely wanted to show the rewards that you can get.
Yeah.
Yes.
Yep.
Yep.
Hmm.
How about you, Janelle? What would be your reason for not moving forward into this right now?
Um, Before I started, diving into it, it was ignorance, not knowing
Hmm.
what to do, how to do it, thinking that I had to have somebody do it for me and that whole thing. So it was ignorance before.
Okay. Ignorance, fear. Marcia?
Trying to unmute. I'm sorry. So pretty much not really being trusting um of a system with my money. And I guess I do have bank accounts, I do have savings, I do have an IRA, I do have a Roth IRA, I have a traditional IRA, and I do have a Roth IRA. I do have savings, but the investment part just was about trust. And I have a mother who is pretty financially savvy, and she has investments. And she does use a broker, has a person who she trusts with her money, and she does well. So, I'm glad I was able to stay up and listen, because this sort of made things a little more, let's say, real.
Mm-hmm.
Me as a person to see other people in my own age group, take this leap. Um,
Okay.
so it's definitely sparked
You
an
can do
interest.
it. You can do it.
I can do it.
So I
So,
think the trust that she said trust. So trust comes from not knowing part of
well,
that.
not even really that. It's I guess try to hold my money close to me. I love the beginning when you talked about, buying things, and why do we do that? I don't
Mhm.
do it because I think it's silly to spend a certain amount of money on a purse. I've always said, why are we, people who look like us, willing to make those type of investments and make people who don't look like us rich? I'm not doing it.
Absolutely.
I'm just not doing it. I've not done it, not going to do it, and I don't really care. I work with women, who look like us, and for lack of a better term, some of them are very bougie. And when I came, to the job with my tote bag, she was like, "Oh, we gotta get you another bag." And I was like, "What? What is that all about?" So, then, as we became more comfortable with one another and got to know each other better, and she's walking around with her Louis Vuitton bag, and I mistakenly said, "Oh, you have that $500 purse." Oh, she was offended because she told me it cost $1,500, and I was offended. So, then, we proceed to be in the lunchroom, and she's begging people for lunch. So I called her out because I said, "Oh, we have a $1,500 purse with nothing in it." So, and that's just me. That's me and my, blatantness, and that people don't really appreciate. But I got to call a spade a spade. Stop making, designers rich. Invest in yourself. If you can't buy your own lunch, you don't need to walk around with a $1,500 purse. I'm so sorry. So,
That's real talk. That's
real
real.
talk, right?
I forget years ago, Marcy was the one who told me people buy what they want and beg for what they
And
need.
I posted
Yeah.
that in the chat because that is, as a community, I recognize that as a very young person. And I say that all the time. We, want to look good. We want to buy hair. We want to buy nails. We want to buy purses, but we can't pay our rent. We can't keep the basics. We can't have, a roof over our head. How many people are homeowners? That's an investment. We can't pay our credit card bill. We got to call mama and them to help us with our basics. We got to get food. No, let's be different. So I have excellent credit for that very reason. If I use my credit card, it's for an emergency or to make a purchase with the intention of paying it off immediately. I do not carry a balance on my credit card. I never have. I learned that when I was a child. And what you talk about, we don't talk about these things at the table. I grew up in a family that did have these conversations at the dinner table.
Awesome.
You guys were unique.
Yes.
Yeah.
Yeah, we didn't have those conversations, but my mother was a child of the 30 depressions. She was a saver. So she always told me, because she grew up in a depression. So she always told me to watch my credit. And I'm happy to say I'm 5 points away from 800,
Awesome. Awesome.
795. So yeah, so for me, I'm definitely good in the saving department. Paid off my car during the pandemic, paid off my ground rent finally, paid off a second mortgage. So I'm all about paying off debt. I'm trying to be debt free. I don't like to owe anybody, but I didn't know how to build wealth. And that's the piece I'm missing. I knew people who did, but they were all men. I know men who have been investing for years, but I don't know any women who, you, Cynthia, it was the first one that I knew personally that was it. I knew business people that did it, but not my personal circle. So that's why my hat's off to you for opening our eyes about how to invest in ourselves by investing in the stock market. And a woman said it, you're investing now, you're investing in your future, and you're leaving a legacy. And you're teaching your children not to, because you can retire early. You don't have to work a 9 to 5. I mean, there's going to be no Social Security by the time we our age, and so you're going to depend on you. All we're going to have is those Roth IRAs and those things, and they don't last a lifetime. That's the savings that's a little bit limited, and so we have to think beyond the basics of these savings accounts and these retirement 401 or 403 accounts that we have. We have to invest now when people are they're making millions and we're sitting we're sitting around looking like, oh, okay, let me open up another mutual fund. That's not going to cut it.
Yep.
Not for me
Yep.
personally.
I'm on my way to millions. I'm learning this, and I'm just like,
And manifesting
okay.
it. And
Yeah, I'm like,
getting
it's
the
coming.
atmosphere. There's no reason why we can't all be millionaires. And
Yep.
we don't speak it because we never thought of it and we don't say it. I'm adamant about that.
Yep.
We all should be on here saying, I'm going to be a millionaire by the time I retire. Multi-millionaire.
sustained.
Why not? Why
Sustained.
wouldn't we? Why wouldn't we? We have to get out of the
Absolutely.
mindset of being okay with just okay. I'm not okay with okay.
And I'm telling you that if and I'm not fully there, but I'm getting there. That 30-70 rule, when you can get into that space where it's just like, let me pay my bills, let me pay my tithes, definitely want to get the Lord his. You do that instead of just like saving everything, because I do have my emergency funds. I need to continue to build that. But everything else is going into investments. It's just investing.
You're investing.
I see that it grows. And I know that it grows.
And it works.
It's just a matter of doing the work to understand the company, check the news out, know what's going on with the market, and just put it there and just watch. When you sleep at night, you wake up the next morning, it's just like, wow. I remember one day I was at work, literally at work, home, but at work. And I peeked in on my account during lunchtime and I'm like, man, I just got a $2 raise today. Because it was just how much I had gained in a day. You know what I mean? So it works. So I just encourage you all to just go for it.
Yeah, you're absolutely right. Especially, like you said, raise, because most of us who work for companies, they're not giving raises and bonuses like they used to.
Right.
And if you work for municipalities, you lucky if you get a COLA. I didn't even know what a COLA was until I worked for government. I thought that was Pepsi. I was like, what's that?
And this is a way to do it.
Yeah.
This is a way to do
Giving
it.
that money that your employers are not giving you for the hard work you're doing.
Right.
You're working for yourself. Stop looking at your employer as your end all. Invest in yourself. And on that note, I think there was another question. Oh, thank you so much for all this great information. God bless you. Okay. All right. Keep thriving. Great night, millionaire ladies. I love it. I love it.
Is that your Facebook group?
Yeah.
Hey, y'all.
They're posting.
Hey, y'all.
Oh my God, you guys were so great. Thank you, Marcy, for reminding us to set our clocks. She's like, you're so practical. I love it. Thank you guys. Cynthia, I love this. And so can you give me a list of those things that I posted in a group again, your websites?
Yeah, I'll actually do I post it in here? Because I can
No,
post
this
it
is a Zoom and nobody's gonna see it on here.
Okay.
But if you could post it in a group and I'm just saying, here's all the websites from tonight. And I just thank you so much. I think there's gonna be a follow-up session. I see it. And Janelle,
I'll be on the follow-up session.
yes, Janelle, yeah, so welcome. And Rose and Marcy.
So much to both of you. Thank you, Lisa, for hosting. Thank you, Cynthia, for sharing your wealth of knowledge and doing it with such love and care and humility.
Yeah.
It's all really relatable and being so transparent. And yeah, and I'm not just talking because you my friend.
I love it.
I go back 30 years, but
we go back.
I love this sister circle.
Really
it's all about the support. Girl power. I love it. This is where we are. I'm so excited for us. So
and then on the follow-up session, we're going to let you know how we have progressed.
That's what I'm saying.
And we're going to show you our charts.
Just don't show your account, but you can show the chart.
Throw that in there. You guys on the Facebook group. She's going to post in the Facebook group. You are in the Facebook group, right, Sid? If not,
yeah, I'm in there, but you know what? I very seldom get on that stuff.
So if you post it in there, you can give it to me. I'll post it in there. But all these links so that you guys will have it. Good night, everybody. Enjoy your week. Remember, you turn your clocks forward, or is it back?
Forward. Spring ahead.
Okay, spring forward. Turn your clocks forward.
Yes.
Thank you, Cynthia.
Yeah, Lisa, I put them in this chat. If you want to copy and paste them.
I can't do it that way. Oh, wait a minute. Maybe I can.
Yeah, I put them in the chat.
Okay, you can. All right.
So you guys can actually just click on them from here and then save them as a bookmark.
It won't come.
Really?
It has to go. I can't do it. No.
Okay.
So if you
I will. I'll send it to you.
send it to me, and I will, if you can email it to me, I can copy paste it in the chat in the Facebook group.
Yep, you got it. Hey, ladies, peaceful and restful night to you and your households and your family. And thank you for allowing me this opportunity to share with you today. I'm excited about me, and I'm excited about you and your future and your family's future.
Amen.
Mhm.
I love that. Janelle, I
Amen.
look forward to meeting you one day. Bye.
Have a good night.
Good
Good
night.
night.
Good night.